Welcome back, everybody. Sive Morten here with the Forex Peace Army as usual. So let's have a look on euro currency. As usual, we have prepared a weekly report, considered recent data that had been released, but also controlled some indicators that shows some progress, which led us to control the overall situation, what's going on in the United States economy and European economy. So the situation in both regions stands far from ideal, but obviously we could say that conditions in the United States are becoming tighter. And obviously currently the government, the United States Treasury, is taking the way not to fall in a recession, not to trigger the contraction of the economy, but they are standing on the way of the inflation. Money supply start rising. So the additional funds will be provided to support the demand in the country, and that immediately, or unavoidably better to say, will lead to rising of the inflation in some perspective. So from that standpoint of view, overall consensus around possible rising of the euro currency in a nearest time, maybe not really fast, but gradual rising, it makes sense because based on expectations, Europe already next month will start discussing possible rate hike. Also, you probably heard about the big militarization program in Europe that will provide a lot of liquidity. The debt to gross domestic product ratios in major countries in Europe, except maybe France, well, they stand far from the United States levels and China levels, for example. They have big room to expand. So, in providing this spending, at some point they will come to final consumer and also boost spending, boost activity, which could support your currency in the short term. So from that standpoint of view, I do not see any reasons to change our view that in the current half a year probably, euro currency should feel more or less good. So would not expect some sharp reversal if, of course, something exceptional will not happen. Besides, in United States, the election race will start in 2 months, actually, usually in 6 months before the event, the race will start, and it just will have the big meaning for United States. They will not be actually interested with all other things, and that also could play some role. So that's what we have on the fundamental background. Besides, on the technical picture that we will discuss right now, you will see that in general it supports this view that euro currency has, or at least right now, it shows not bad bullish signs. And on dollar index as well. So let's start with the technical picture. First of all, on the daily chart, you could see that on Friday we've got good thrusting acceleration here. It's very good candle. You can see that we have the tail close on the Friday session, despite that payrolls actually were better, significantly better than expected. Nevertheless, euro currency has increased the value. On the euro currency, it's not a big problem, because on the weekly chart, for example, we have only one grabber, which is a bearish. Yes, it makes bears to worry about, and this is reasonable in the current circumstances. Personally, I think that more chances that we will get upward continuation. Overall shape of the diamond on the weekly chart suggests that probably market should keep moving higher. But this is only the half of the story. If you take a look at the dollar index, where actually a major picture stands. First of all, on the weekly chart, you could see that we have two opposite grabbers. First, the same as in the euro currency. Another one in opposite direction, and gap is not closed. And recent performance was to the downside. All this stuff is happening on the bottom of the right arm. And this is really the sign of the weakness on the dollar, which is not typical for the bullish reversal market, bullish reversal pattern. So here's the bulls should show the activity. They should show the market reversal to the upside, but we have the opposite scenario. And taking a look on the daily chart, those grabbers that are vital for current bullish background on the dollar stand at the eve of the failure. A lot of them have been formed, but two of them already failed. This one and that one. Here's just small distance until the lows of these two grabbers, and the market easily could just do this in the beginning of the next week. So overall, this performance shows the weakness of the dollar, which suggests on the euro currency it could mean that market will go higher. And this will have a lot of consequences. Why? Because we're dealing with the weekly head and shoulders. Failure on the right arm immediately lead us to below the 95. The head will be taken out. I am not will be surprised too much if even we will get here kind of the butterfly later, with even more extension to the downside. So that's what actually stands in focus. That's the major thing. Next week we will get a lot of data. So first of all, the CPI, PPI numbers that should include the first fruits of the Iranian war and high energy prices. It could bring some surprises. So definitely something to keep an eye on. Now, by taking a look at the lower time frame, if you take a look at the 4th time frame chart, and here we also have clear signs of the head and shoulders failure. Suggests the market should jump above the 1850 area. Reaction on the Gartley's triple-T was just minimal, so market has completed this 30% retracement that we discussed on Friday. We said this is bread and butter buy and talked about the possible long position taken. So, and market actually here has formed the bullish reversal swing. So we can see this action is stronger than this one. Besides, market keep forming high lows, which is also kind of the bullish performance. Finally, on an hourly chart, you could see that initially we suggested the pullback just to the 750. We said here is retracement. You could consider taking the position with the pullback here, but probably if market is really bearish, it should not show a really big upper performance. On 1750 confluence resistance, it should be enough. But here you can see that the market just has passed it as a knife through the bottom and actually no reaction at all. On even it even has exceeded 618 resistance right now. So actually all few levels have been broken and way up. And actually this ABCD pattern already erased. So that's actually definitely the bullish sign, which means that in the current circumstances, I wouldn't consider taking new shorts and keep watching what will happen. If it will be, if we get lucky, then probably we could play with these reverse head and shoulders on top. So if somehow we will get some pullback, at least to the 1760, maybe 1755 area, 1750, that might be great. If market will show some kind of the harmony here, and here it might be the opportunity for considering taking the long position. That I think the pattern that we could start with, and then just see what will happen next.